Well, hello everyone and welcome to Moementum channel. My name is Mo, and in this video, we'll review and compare 4 exchange traded funds in Canadian dollars to own in order to invest in the US S&P 500 index. We'll analyze the ETF costs, their risk tolerance and levels, and past returns. And finally, I'll share my pick for the best S&P 500 ETF in Canadian dollars based on their pros and cons. All of the 4 ETFs we will discuss are traded in Canadian dollars through Toronto Stock Exchange and track, to the extent possible, the performance of the S&P 500 index net of expenses. Just a quick reminder, the S&P 500 index is a stock market index that measures the stock performance of 500 large companies listed on a stock exchange in the United States. It is one of the most commonly followed equity indices in the world. Before we continue the video, I have a favor to ask you. I've put a lot of time and effort to put this video together, and in return, I appreciate if you can give this video a thumbs up and subscribe to Moementum channel. Thank you. Alright, back to the topic of this video. Here are the 4 ETFs that I'd recommend to invest in the United States S&P 500 index, and we'll review each of them more closely and compare their pros and cons in the next few minutes. Let's get into it. The first ETF to review is ZSP, or the BMO S&P 500 Index ETF. ZSP has $8.5 billion assets under management and currently has an annualized distribution yield of 1.26%, which is paid on a quarterly basis to shareholders. You can think of your distribution yield similar to the dividend income you earn by owning your stock. So if you invested $10,000 in ZSP, in a year, you could expect to get back $126 at distribution income, and this is aside from the potential growth in the value of your investment through appreciation. ZSP has a management expense ratio of 0.09%, which means if you were to invest $10,000, you'd pay a $9 in fee in 1 year. This ETF has a risk rating of medium. The second ETF to review is VFV, or Vanguard S&P 500 Index ETF. VFV has a $4.5 billion assets under management and currently has an annual distribution yield of 1.21%, which is paid on a quarterly basis to shareholders. VFV has a management expense ratio of 0.08%, which means if you were to invest $10,000, you'd pay $8 in fees in a year. This ETF also has a risk rating of medium. The next 2 ETFs we will review are Canadian-hedged. But what does that mean to be Canadian-hedged ETF? Let us explain that in a simple language based on a summary of a Money Sense article with its link provided in the video description for your reference. When you buy an ETF that holds foreign equities, you're taking on 2 different risks. The first comes simply from owning stocks, which of course can go up or down in price. But the second risk is less obvious. You're exposed to the currency in which the stocks are denominated. So if you hold US stocks and the US dollar rises in value relative to Canadian dollars, you get a boost in your returns. On the flip side though, if the Canadian dollar's currency rises and the US dollar falls, as it has in recent months, your return will suffer. That's the reasoning behind currency hedging. It's designed to eliminate that second risk by removing the effect of fluctuating exchange rates. ETF using this strategy apply instruments called currency forwards, which allow them to look in a specific exchange rate on a future date, as opposed to an unhedged ETF where you're fully exposed to the potential for currency fluctuations, in this case between USD and Canadian dollars. What's of note is that during any period in time when the Canadian dollar rises in value, whether against the US dollars or some other foreign currency, using ETFs with currency hedging will lead to higher return in your foreign equity investments. And whenever the Canadian dollars loses value relative to foreign currencies, the unhedged version will win out. Overall, according to the Money Sense article findings, funds that do not use hedging strategies tend to track their indexes more closely over the long term and appear to be less volatile. But be sure to check out the Money Sense article to better understand the differences and choose on your own whether a hedged or unhedged ETF is better for you. But just to give you an example, the Canada Pension Plan holds billions in foreign assets and does not use currency hedging. The third ETF to review is VSP, or Vanguard S&P 500 Index ETF with Canadian dollars hedged. VFV has $1.6 billion assets under management and currently has an annual distribution yield of 1.22%, which is paid on a quarterly basis. VSP has a management expense ratio of 0.08%, which means if you were to invest $10,000, you'd pay an $8 fee in the year. This ETF also has a risk rating of medium. The fourth and last ETF to review is XSP, or iShares Core S&P 500 Index ETF with Canadian dollars hedged. XSP has $7.2 billion assets under management and currently has an annual distribution yield of 1.18%, which is paid on a semi-annual basis. XSP has a management expense ratio of 0.10%, which means if you were to invest $10,000, you'd pay a $10 fee each year. This ETF also has a risk rating of medium. Alright, now that we have taken a close look at these 4 ETFs, let us compare their past performance and do some tabular comparisons. While past performance is not a guarantee for future, it can provide some insights for comparison and some baselines for Canadian investors to rely on. The close comparison here shows that when it comes to assets under management, ZSP has the highest amount of assets under management, so it is the winner in that sense based on that category. In terms of the fee though, VFV with 0.08% fee, it has the lowest fee among the 4 ETFs, and as a result gets our vote in that category. In terms of distribution yield, the highest distribution yield belongs to ZSP with 1.26%. For those investors who are interested in a continuous flow of income, a quarterly distribution might be more desirable, and as such, ZSP, VFV, and VSP, which all of them have a quarterly distribution payment, are favorable here based on our analysis. Just as a reminder, ZSP and VFV are non-hedged, and VSP and XSP are hedged ETFs. As we indicated earlier, during the time frames that the Canadian dollars is doing better and stronger compared to US dollars, during those times, a hedged ETF tends to do better and perform better. And that is actually the case here, as you notice, over the past 1 month and over the past 3 and 1 year months, you'd notice that the Canadian hedged ETFs, VSP and XSP, have done much better compared to their non-hedged equivalents. In this case, you'd notice that, for example, for VSP, you have a 1-year return of over 54%, and same goes for XSP, whereas for VFE and ZSP, your 1-year return is hovering around 39%. So that's a considerable difference for 1 year, mainly due to the fact that, as you noticed, their Canadian currency has done quite well over the span of the past 1 year in comparison to US dollars, and becoming stronger over the span of the past 1 year. However, over the longer period of time, let's say over the span of the 3 years and 5 years, you'd notice how VFV and ZSP have done better, and so that Canadian hedge is not really playing much of a big part in here, and in fact it's actually not performing even better. In fact, it's lagging behind slightly when it comes to these 4 ETFs to comparison. Our overall returns here shown on screen, keep in mind there are cumulative performance. They are not annualized and rather cumulative performance, and they are for the period ending March 31st of 2021. What it shows you here is that if you had invested $10,000 in any of these ETFs 5 years ago, by now, for the most part, your money would have doubled, almost doubled, at least for VSP and XSP, and slightly more than doubled for ZSP and VFE. That's not too bad at all for investors who would like to invest more passively without having to pick actually stocks, but rather investing more broadly into the 500 largest companies in the United States through one of these low-cost ETFs. There you have it, folks, a quick review of 4 exchange-traded funds that are available for Canadian investors to invest in the companies in the US and the S&P 500. And as you know, using a tool such as Wealthsimple Trade, you are able to buy these ETFs at no cost whatsoever. They are available in Canadian dollars. You could also use Questrade, the other brokerage, which allows buying ETFs at no cost as well, whether it's for US or Canadian dollars ETFs. That's an offer that Questrade offers. If you are interested to get started investing and picking any of these stocks that might interest you, and you do not currently have an account, be sure to check out our referral links, which allows you to get some referral bonuses by signing up to any of the favorite recommended brokers that we are currently using ourselves. If you have any question on this video, be sure to leave us a comment, and we'll definitely respond back to you and provide our thoughts and inputs on your questions. If you have any thoughts on any future videos that you would like to see us, and any future stocks or ETFs that you'd like us to cover, let us know by commenting down below. Thank you once again for watching this video until the end, and we hope you found it beneficial. If you did, please be sure to give it a thumbs up and share it with someone who might benefit from the video as well. And of course, don't forget to subscribe to Moementum channel for more videos about stock market investing, investing in alternative avenues such as real estate or crypto, as well as learning more about financial planning and financial education. Thank you, and we hope to see you next time.